learn from your numbers? Is it a macro read on where the U.S. economy is, or is it an operational read on what you guys did at Carvana?
I think it's the latter. I think our team has done an incredible job the last couple of years. As you said, we had 22 and 23 were pretty tough for us after an incredible run from 2013 through 2021. We were growing very fast, and customers were migrating more and more to online purchasing of cars. When we went through that period, I think the team came together. We responded incredibly well. And I think this quarter is undoubtedly the best quarter we've had in our history. It's the result of a ton of hard work. It's a result of the team coming together and doing an awesome job. So to all of you out there, thank you very much. Great job.
When we take a look at some of your profit margins, I mean, it looks like you're making like, what, $3,000 plus for a car. This is so much more ahead of your competition. How do you do that? And how do you keep growing that? And is that sustainable?
Sure. Well, let me start with this. I think, what we're most proud of is when we set out to try to build Carvana, we wanted to give customers the best deal we possibly could. We wanted to give them a better deal than the competition. We wanted to give them an experience that was simpler, a broader selection. And we wanted to build a business model that could ultimately have higher returns than the traditional business models, had. And that's very difficult to do. The only way you can do all those things at once is to build a completely different business. And so, we've built a transaction flow where customers can go through on their own. They can get approved for financing. They can select the car. That can take seconds. They're in control of the entire thing. And then we've built an entirely new supply chain underneath it with reconditioning centers and logistics that allows us to give customers access to a nationwide inventory and ship cars around the country. And the economics of it are just very different. There were a lot of fixed costs in building that system, but the variable costs are much lower. And then we're monetizing it more completely by being more vertically integrated. So it allows us to check all those boxes, and hopefully we keep doing the same.
There was a lot of discussion, prior to this year about the debt load, Ernie. I know that at least that's stabilized. Do you anticipate that we could see a reduction on the balance sheet this year, a significant reduction?
Yeah, so I think, we made the statement yesterday in our earnings call that we plan to pay cash interest on our bonds over time. We do plan to delever over time. And I think all that's enabled by the incredible progress we've made. We were extremely proud to report $235 million of EBITDA in Q1. You annualize that, that's about $1 billion a year, and we're 1% of the market. So, we clearly are sitting in front of a huge, huge opportunity, and it's our team's job to execute really well into that opportunity. I think we're going to have pretty great things in front of us if we do.
As part of that opportunity, are you able to acquire cars at a more reasonable, or I should say a more favorable price than maybe in the year past?
Sure. So I think, part of our business is buying cars from our customers. So customers can go to our website. We'll give them the value online and in minutes, and we can come pick up the car from them as soon as the same day, or they can come drop it off to us. That's the way we get the majority of our cars. That's an experience that customers love. They can get paid quickly. It's an experience that we're well positioned to provide because we have that underlying logistics network that allows us to buy cars from them and then ship them to wherever they're most valuable. There are oftentimes differences in car values around the country, so we can buy them wherever they are and then sell them in the places where they're more valuable. And that works out great for our customers that are selling cars because they get a great value, and also great for our customers that are buying cars because they have access to such supply.
Is there any sort of trend line that you've seen in terms of the types of cars that people are gravitating to right now?
I think it's first order. The most interesting storyline there is probably what's going on with EVs. And I think the EV market generally looks a lot like the used market, but it trails. And so, last year EVs were around 1% of used car sales. They were around 7.5%, give or take, of new car sales. This year they're starting to ramp up, and they're heading in the direction of where new cars are. New cars are also growing as well. So we've seen more demand there. But I think in general, it's, customers have been looking to save money as car prices went up and as interest rates went up. So we've seen that as a multi-year trend, but nothing too notable beyond that.
Are the high borrowing costs for cars at all, or for auto loans, affecting at all what people are buying and what price point, et cetera?
Yeah, I think, car payments are basically the sum of the interest rate environment and the car price environment. And car prices are higher than they were pre-pandemic, and interest rates are also higher. And so car payments for customers are higher, even on an inflation-adjusted basis. They're probably between maybe 5 and 20% higher than they were pre-pandemic. So that has people trying to save money. And we've seen people trading down to cars that are a little bit older with a little higher mileage. But then over the last 2 years, as we've seen depreciation, we've seen customers start to migrate back in the direction that they were prior. So our best guess is that probably continues. But I think, people are trying to find a car that fits their life.